Hello, everyone. This presentation is about the profit and loss statement, also known as the income statement. Many of you might be looking at this webinar recording because you realize that you need this type of statement for the sole proprietor grant through IEDA. First, I want to tell you a little bit about myself. I work for the Iowa Center for Economic Success. I'm both in the IT department and the finance department dealing with microloans. So what we're going to talk about today is the income statement, what it is, the structure of it, an example of it, and a quick review. I'll mostly be using P&L to describe it from now on, but it also is known as an income statement. You can use both terms interchangeably. Okay, the profit and loss. What does it deal with? It deals with the company's revenues and expenses. It shows, in the end, how profitable a company is over time. And what do we mean by over time? Over a period of time. So a profit and loss isn't for like a certain day in time. It's for a period of time, whether that be a year, a month, a quarter, a week, a day. It's up to you based on the type of profit and loss statement you want and how long a period of time you want to cover. The structure of it starts, again, like always, with revenues. And then for certain industries, you might have a cost of goods sold, but that's mostly for like product industries, some type of business that sells a product. Then you're gonna have all your regular expenses like payroll, advertising, rent, taxes, interest expense on loans you might have for your business. We don't include the principal payments, only interest expense on loans, technology. And then after you take revenue minus cost of goods sold and minus all your other expenses, you get the net income. And that's pretty much how profitable this is. How much money does your business make at the end of the day for a certain period of time? You might be wondering about yourself, so what is cost of goods sold from a business? So the answer is, for a lot of businesses, it's complicated. For this profit and loss statement, which would be for the sole proprietor grant, I'm going to try to make it as easy as possible. So for this grant, what you're going to turn into the underwriters, you're only going to have a cost of goods sold if you actually sell a product. So if you don't have like an actual physical product you sell, just put it as a zero. I know you might have accountants or someone else explain to you that, okay, you could have a cost of goods sold or you could have a cost of revenue, but just for the purposes of this grant, if you don't sell an actual physical product, just put zero for cost of goods sold, just because we're trying to make it easy as possible for everybody. We'll add those expenses on that you might want to include under cost of goods sold under one of the general expenses. So how do you get it? Generally, you just want to use the formula. So you would get starting inventory, and hopefully you would get that from your balance sheet for the day before the period starts. And you would use that as your starting inventory. Then you would include all your inventory purchases, and then you would minus it for the ending inventory at the end of whatever period you're using for your profit and loss statement. And you use that to get a dollar amount for the cost of goods sold. So what do you include as inventory? You would include products that are directly related to the cost of creating whatever good or product you're selling. So that's why we call it cost of goods sold. And why do we use this formula? Why can't you just include whatever you buy over a period? Because you might not use some of that product during that period. So you don't want to include that under your cost of goods sold because that product is it's going to be in your balance sheet, but it's still there, but you didn't use it to sell any products over the time period that we're covering. So we don't want to include those purchases for whatever time period you're creating for your profit and loss statement. Yep, I think that covers it. If you have any questions, you can just email me afterwards. I'll give you my email. Oops. So here's an example of what a 12-month profit and loss statement would be. You would just divided it into months, revenue for sales. Depending on how complex your business is, you might have multiple categories. For some businesses, you might just have one category. You might just call it sales if you want to keep it simple. Cost of goods sold, again, you can read the explanation, but again, it's the expenses directly related to producing or buying whatever products or services that you sold over the time period that the profit and loss statement is covering. And then expenses are, I mean, you can see it here. It's going to be a little different for every single business, but in general, you're probably going to have some type of payroll expense. You're going to have some type of rent expense. You're going to have utilities, phone, advertising, insurance. If you took out a business loan, you wouldn't include the principal payments you make on the loan, but you would include the interest. So whatever that interest you pay over the time period for that business loan, you would include it on there. And then maybe if you pay an accountant to do it for you, you might have a legal, or if you pay a lawyer, you might have legal fees, whatever expenses you have over a time period. If you're uncertain that you might be missing expenses, especially if you're doing this yourself, I would recommend that you go into Google, you type in profit and loss statement, and then for whatever business type or whatever industry type you're in. So it might be profit and loss statement for hairdresser, or profit and loss statement for pizza business. So just to give you examples of example profit and loss statements for those businesses, just so you can make sure you're hitting every single expense that you need to include on your profit and loss statement. Next, I mean, taxes, they're definitely an expense, so I would include those too. And then after everything, you get to the net profit. So how much, after all your expenses, did you make? And then you get your net operating income, which is an awesome number to have. And then before we go to the review, I want to go through a sample profit and loss statement. So for this profit and loss statement, I'm going to use my sample company. It's not a real company, but Dale's Pizza. So we sell pizzas. Revenue, I know pizza places, they can have a lot of different types of revenue. Like I could sell sodas, cookies, subs, but unfortunately for my customers, I'm very unimaginative. So I only sell pizzas. So I don't want to get rid of that formula. Just to make it clear, just get rid of the categories that you don't use. I'm going to keep category 6 just because I have a formula there that I don't want to get rid of just yet. So for pizzas, let's say I made $70,000 in sales for what time period? March 2020. Lots of people ordering pizzas. For cost of goods sold, again, because I'm unimaginative, really the only direct good I have in creating my pizzas are pizza ingredients. So how do I get that? We're going to use the formula just for this purpose. So I already have it out here. So let's say at the beginning, March 1st, 12:01 midnight, I had $5,000 worth of pizza ingredients that I could use to make pizzas. And then over the period of the month, I purchased an extra $25,000. And then at the end of the month, I got $6,000 left over. So what would my cost of goods sold be? It'd be $24,000. And I just want to make this like a clear point. This kind of just shows why you shouldn't just include all your purchases of ingredients you need to create your product, because 1,000 of that I didn't use to sell pizzas. So I don't want to include the entire thing because I really only used $24,000 worth of pizza ingredients, not 25,000. So that's why I want to show you that this formula is super important and that you shouldn't just include how many pizza ingredients or how many whatever type of good you use to create your product over the time period. Why you shouldn't just include that price. You should only include the price for cost of goods sold. So next, we have our expenses. But actually, before I go to that, so if this is your first time doing this and you don't really know how much product you had at the beginning of the month, just for the purposes of the grant, what I would say is just use a percentage of your sales. So like, let's say you're a hairdresser and you sold $5,000 worth of hair gel or whatever product you sell. Let's use 4,000 just because for math reasons. And let's say you usually mark up retail 2 times what you sell it for. So we'll ignore that we have the 70,000. We'll just ignore this for now. So let's just pretend that we only have $4,000 worth of sales because we're a hairdresser. So, or you can use any other amount, but let's for this example, let's use hair gel and you sold $4,000 worth of it retail. But knowing that you charge 2 times, you know that you would have had to buy $2,000 worth of hair gel. So your cost of goods sold for hair gel would be $2,000. So that's like another way you could get to cost of goods sold is just using a percentage of your sales. But if you don't have to use this for this grant application, don't do it. Use the formula. But if you don't know your beginning inventory and your ending inventory, then yes, just use it as a percentage of your product sales if you know the market price. So after that, let's go back to my pizza company. So let's get rid of hair gel because I sell pizzas, not hair gel. $70,000 just for the formula. $70,000 is my total sales. Pizza ingredients using that formula above. So beginning inventory plus purchases minus inventory minus ending inventory. I got 24,000. So I got $24,000 in pizza sales, which means I had a gross profit. I know some people call it margin of $46,000 for the month of March. So now let's go to my regular operating expenses. Again, this will be different for every single type of business, but let's just pretend I pay all my workers in total $20,000 for the month. Outside services, I don't have any of that. Supplies, I got TP, I got napkins, other random office supplies, so $2,000 for that. Repairs and maintenance, let's say that one of my ovens went down, so I had to pay $3,000 for someone to fix it. Advertising, Facebook ads are expensive. Car and travel, I use my car as a business car to deliver pizzas for the month, so let's put $2,000 for that. Accounting and legal, $500 for legal. Rent $1,200. Telephone $400. Utilities $300. 500. Taxes, let's say I pay $400 in taxes. Interest, let's say I had a $50,000 loan, and I realized for the month of March, of the loan payment I made, 120 of that was for interest purposes. Depreciation, we're gonna go really quick into this, but so let's say I made like a big investment into let's say a vehicle. So I paid $20,000 for that. You're probably going to need to talk to an accountant for this or research it online. But let's say I bought a $20,000 equipment. I'm depreciating it over a 10-year period. And for the month of March, that depreciation total would be $200. Other expenses, we'll put trash takeout. So I gotta pay someone to take out my trash. It costs me $50 a month. You have other expenses, just add your other expenses here, or if you don't use the expenses, just get rid of them. Delete. So I had $34,670 in expenses for a total net profit of $11,350. Again, if we want to make this look nice, make this, get rid of these. Okay, you get rid of that too. That's fine. All that really matters is these two columns. So after everything, after all my expenses and after all my cost of goods sold, I had 11,333. And that is my sample profit and loss statement. Again, every single profit and loss statement is going to look different. If you have any questions, just email me. But let's go to the review quick. So in review, the income statement or profit and loss statement is over a period of time. The purposes of it is for profitability. How do we measure profitability? Revenue, expenses, and then profitability. The starting point, as you can see, the first thing we filled out was our revenue or our sales, and the ending point was the net income. A couple accounting softwares you can use to measure your profit and loss or your balance sheets or even your cash flow. It's just right here. I recommend the two ones you use are QuickBooks and FreshBooks, just due to their price. So you can get either of them for, I think, $10 a month or like $120 a year. And I have a lot of experience and know a lot of stories about people having really good accounting and financial records through those two services. Or if you want to spend a little bit more money and you don't want to worry about your financial statements at all, then you're just going to have to pay an accountant to do your work for you. And that's just the price is just going to depend on how much you use them. But you can expect to pay maybe a couple $1,000s a year, especially if you want pretty frequent financial statements. Since I'm the only one on the call, there aren't going to be any questions. I'm going to end this just by giving my contact information out. So you can contact me at rdale@theiowacenter.org. Or you can give us a call at 515-283-0940. Have a great day.